$1.6 billion. That's how much Strategy just dropped on Bitcoin in a single purchase, but that's not even the craziest news story. The Ethereum Foundation just released their 38-page document that could completely change how we think about ETH. A token pumped 60% overnight after a major listing and many other news. Let's get into it. What's up, everyone? Welcome back to Crypto Red, your daily source for everything crypto. If you're new here, smash that subscribe button so you never miss a video. Let's jump straight into the markets. So looking at the market today, Bitcoin is sitting around $74,000, Ethereum at $2,300. And here's something interesting. XRP had just flipped BNB again. Most altcoins are in the green today, so overall a decent day for crypto, but the real story isn't in the charts, it's in what's happening behind the scenes. And that starts with this massive document from the Ethereum Foundation, the Ethereum Foundation mandate. So the Ethereum Foundation just published what they call the Ethereum Foundation mandate. It's 38 pages long. I read the whole thing, so you don't have to, and honestly, it's one of the most important documents they've ever put out. Here's why. Right at the beginning, they make a statement that I think a lot of people missed. They explicitly say that Ethereum is a store of value and money. Let me say that again. The Ethereum Foundation is now officially positioning ETH as something that is meant to appreciate over time. That is a massive shift. For years, people criticized the foundation for not caring about the price of ETH, for not thinking about the value capture. Well, that narrative just changed. Now, the two non-negotiable principles they lay out are, number one, personal sovereignty, self-sovereignty, meaning you always control your identity, your data, your crypto, and number two, scalability, making sure anyone in the world can actually use this thing. But there's the part that really caught my attention. They introduced this thing called CROPS, C-R-O-P-S, and it stands for the 4 properties that Ethereum must have. C is for censorship resistant. No one can stop your transaction. No one can stop you from spending your money. R is actually for, they fold it into the R is for resistance, so you have the C of censorship, R of resistance, P is for private, and this is the big one, and S is for secure. Now, privacy. Let's talk about that for a second, because Ethereum right now, not private at all. Every transaction, every wallet balance, it's all on chain for anyone to see. But in this document, the foundation is saying privacy is a core principle, not a nice to have. It's really a core principle of Ethereum. What does that mean practically? We could see something like Zcash level privacy backed into Ethereum by default. Zero knowledge proofs everywhere. A base layer where your transactions are private unless you choose to make them public. And this is where Ethereum could really differentiate itself from Bitcoin, which has no built-in privacy right now. Now, some people on X criticize this document. They say the foundation is being too philosophical, not concrete enough. But actually disagree. They have a clear vision, they have a clear roadmap, and they're executing on it. We should see major progress by 2028, 2020, to 2030, when the full vision of the lean Ethereum comes through. The endgame version of Ethereum with ZK proof everywhere, built-in privacy, and massive scalability, that's coming. It's just going to take time, and this document tells me they know exactly where they're going. So bottom line, this keeps me bullish on Ethereum long term, very bullish. And speaking of Ethereum, let's talk about who's putting their money where their mouth is. Bitmine, the company that's been aggressively accumulating ETH, just bought another $138 million worth of Ethereum. They now hold 3.8% of the total ETH supply. Nearly 4% of all Ethereum that exists is held by one company. Now here's the thing, Bitmine started buying Ether in June, July of last year, and they're actually underwater, and their position right now, is underwater. The price has dropped since they start accumulating, but they're not selling. They're buying more, and that tells you everything you need to know about their conviction. Oh, and here's a fun detail, they actually bought $10 million worth of ETH directly from the Ethereum Foundation. The foundation regularly sells it to fund development and pay developers, and Bitmine scooped some of that up. So you've got the foundation funding its mission, and Bitmine is happy to absorb that supply. That's healthy ecosystem dynamic. But the absolute monster purchase this week that goes to Strategy. Strategy, formerly MicroStrategy, just bought $1.6 billion worth of Bitcoin. They now hold 761,000 Bitcoin total. And how are they funding this? Through STRC, their derivative product that offers investors roughly an 11% yield. Now, personally, I'm not a fan of holding STRC itself. I think it carries a lot of risk. But what it does do is allow strategy to raise a massive amount of capital, convert it into Bitcoin, and pay interest to STRC holders monthly. It's working incredibly well for them as a fundraising mechanism, and it's great news for every Bitcoin holder because it means continuous buying pressure. And strategy isn't alone. Metaplanet just raised $255 million, and their target is to accumulate more than 200,000 BTC by 2027. So you've got multiple publicly traded companies racing to stake as much BTC as possible, and that's institutional demand that isn't going away. Now, this next piece of news really blew my mind. You have Matt Hougan from Bitwise, the analyst who made the famous $1 million Bitcoin prediction. He's the chief investment officer of Bitwise. He's pointed out something really interesting. Between January 2024 and October 2025, Bitcoin's ETF accumulated $60 billion in assets. Then, from October 2025, Bitcoin dropped nearly 50% at one point, a massive correction. And how much left the ETFs? Well, less than $10 billion. Out of $60 billion, $10 billion left Bitcoin, the Bitcoin's ETFs. That meant the vast majority of ETF investors held through one of the worst corrections in recent memory. Why? Because the people buying Bitcoin through ETFs are primarily institutions, financial advisors, and professional allocators. These are people who took a career risk by recommending Bitcoin to their clients. It's not a consensus play, it's a conviction play. And when you've stuck your neck out of Bitcoin, a 50% drawdown doesn't shake you. You already knew this was volatile when you made the allocation, so you don't sell when it drops 50%. This is incredibly bullish data. It means the ETFs flows aren't scared money. They're not scared. They're sticky. They're long-term investors, and that's exactly the kind of demand that creates a strong price floor over time. All right, let's switch gears and talk about OpenSea. If you've been waiting for the OpenSea token, I've got bad news. They just announced they're delaying the launch indefinitely. The reason? Market conditions aren't optimal. Now, for some context, OpenSea first teased their token back in October. They launched farming seasons where users could earn points. People got excited, and now, well, they pushed back with no new date. Here's why it matters. People have been trading NFTs on OpenSea for over 5 years now. 5 years of fees, 5 years of loyalty, and still no token. And honestly, they missed their window. If they had launched during the NFT bull run in 2021, they could have had an absolutely enormous valuation. They could have delivered one of the biggest airdrops in crypto history to their users. But they didn't. They waited. They got outpaced by competitors who did launch tokens, for example, Blast, and now they're in a much weaker position. The community is understandably frustrated. Years of promises, multiple teases, and still nothing concrete. If you're farming OpenSea points right now, just know that there is no guarantee on timing. It could be months, it could be longer. Manage your expectation accordingly. On a more positive note, let's talk about a token that had a massive day. Centrifuge, a real-world asset tokenization project, pumped 60% after getting listed on Binance. If you're not familiar, Centrifuge is in the RWA space, which is one of the hottest narratives in crypto right now. Tokenizing real-world assets like debt, real estate, invoice, or I don't know, everything. Now the pump has cooled off a bit since the initial spike, as these things usually do. The current fully diluted valuation is around $100 million. Most tokens are already in circulation, so the unlock pressure is relatively low. And the Binance listing definitely gave it a major boost. And the RWA narratives continue to have strong legs heading into the rest of this cycle. Okay, now for the story I teased at the beginning because I don't know if I teased. Maybe I forgot to tell you about the beginning, but it's a funny story. In the United Kingdom, a man is accusing his wife of stealing more than 2,000 Bitcoin from his Treasure hardware wallet back in 2023. That's worth approximately $176 million. Now, how do you steal Bitcoin from a hardware wallet? She didn't hack it, she didn't guess his PIN, she didn't physically steal the device. She allegedly placed hidden cameras in their home and recorded him when he was entering or viewing his seed phrase. That's it. No sophisticated hack, no technical exploit, just a camera pointed at the right place at the right time. No, this is still just an accusation. The trial hasn't happened yet, but whether or not this specific case is true, the lesson is critical. It's a really important lesson. Your seed phrase is the master key to everything. If someone sees it, they own your crypto, period. And most people don't think about cameras in their own home. I'm not saying you need to be paranoid about your living room, but here's what I'm saying. Never, ever handle your seed phrase in a public place. Not a coffee shop, not at a restaurant, not in a park, not at a, I don't know, a fast food restaurant or anywhere, nowhere public. If you're typing it, writing it down, or even looking at it on the screen, someone could be watching. Security cameras, someone's phone, a person looking over his shoulder. It only takes one moment. At home, you're generally fine, but if you've got smart home cameras, for example, Ring doorbells or any recording devices, just be aware of their field of view when you're handling sensitive information. This story is a reminder that the weakest link in crypto security is almost always human, not technical. All right, that's going to wrap it up for today. For today's video, we covered a lot of news: strategy, $1 billion Bitcoin, the Ethereum Foundation game-changing vision document, Bitmine's continued ETH accumulation, the disappointing OpenSea delay, Centrifuge's massive pump, and a wild security cautionary tale. If you found this valuable, hit that like button. It generally helps the channel. Drop a comment below and tell me what you think about the Ethereum Foundation new direction, for example. Are they on the right track, or is it too philosophical? I want to hear your take. Subscribe if you haven't already, and I'll see you